Hi, so I think we'll start now. We have quite a lot of people joined, which is brilliant. And thank you everybody so much for joining us this morning. We hope it's going to be an interesting lineup for you today, which I do hope you'll enjoy. And we are going to answer questions at the end. So feel free to send in as many questions as you like. And of course, property related, please. And to start with, I'm delighted to welcome Rob Symes from Rightmove, which is the UK's largest portal, to provide in-depth analysis on the property market, how much COVID-19, the coronavirus, has affected the market, and whether this is actually a good time to invest. And then I'm going to talk on buying well. And my name is Marc von Grundherr, as I said at the beginning. I'm a director of Benham and Reeves based here in London. I've been in the market for 25 years. And again, I'm happy to answer any questions property related. And I'm going to talk on buying well. And then I'm going to be followed by Mansi, Mehra, Design Director of Leading Interior Designers, InStyle Direct, to explain the best ways to maximize your investment. And then we'll all be back, as I said, to answer questions. So please do keep those questions coming in all the way through, and we'll try to get to as many of them as we can. And if we can't at the end, then we'll reply to you and give you an answer. So without further ado, I'm going to pass over to Rob, and he's going to do his talk on the London market and his update. Thank you very much.
Thanks, Mark, and great to be here. And morning to everyone wherever you are in the world. I hope you and your families are safe during this difficult time. We're here to talk about the property market, specifically the London property market. We'll talk a little bit about the past history of the London market, where we are today, and it really is quite a fast-changing picture at the moment. And we'll spend a little bit of time talking about where we might be going over the next few months too. While there may not be much good news around at present, the good news is that the market has reopened. So I thought it's a good opportunity to talk about what's happened in the past, and a lot has happened in London over the last 20 years, and what the early signs for us coming out of lockdown are as well. So if we go on to our first slide, in this slide, you can see the general trend in London has been strong capital growth appreciation over a 20-year timeline. In September 2001, the average asking price in London was just over £200,000. Today, the average asking price is £637,000, which is up 2.5% against last year. But perhaps the most important thing to look at for all of you today who are thinking about investing in London is the decline in the asking price during the financial crisis of 2007 and 2008. After the credit crunch, it took time for London to recover, and it was a scary time for a number of investors. But we soon saw heady double-digit rises in the years of 2013 to 2016. London asking prices had already started to drop a little bit after the Brexit vote, and coupled with the need for a price correction after years of strong growth, led to prices stabilising for a few years after Brexit. Since then, the market actually was starting to come back, and rental yields were also starting to rise again. So it remains to be seen what happens now when the market has reopened. One thing we've heard anecdotally is that deals on higher value properties are holding together better during lockdown. The key really is that if you believe that property is a solid asset class, which many of us do, probably most of us on this webinar, the important thing is to invest for the long term. As this graph shows, over a long enough time horizon, London has been an excellent place to invest. Some of you will remember many property investors despairing in 2007 and 2008. But as you can see from the chart, if you had invested in London during that time, you would likely seen significant growth since. But capital growth is only one thing to think about when investing in the property space. You also have to think about who is going to be renting those properties. And there are some strong structural forces that make renting an attractive investment too, as you can see from the next slide. On the next slide, hopefully, if it comes up in a second, we can see an ongoing trend in the private rented sector. The ongoing national trend is that more people are renting for longer, and the private rented sector has grown significantly over the last 15 years. The number of households living in the private rented sector in the UK increased from 2.8 million in 2007 to 4.5 million in 2017, an increase of 63%. We believe that the demand for rented property will continue to increase over the next 5 years. We also believe that although many people are still keen to own their own home, people in the UK are now renting for longer periods than they would have done historically, which also means that if you've got a good tenant, they could stay in the property for a longer period too. All this is good news for investors because there's clearly a larger demand for rental properties, which might mean more choice for tenants, but also hopefully means increased rental yields over time as more people begin to rent. And on the next slide, you can see that renting isn't just the preserve of the young, that's a sort of a misconception that many people have when they're buying their first buy-to-let property, because actually the fastest demographic recently in growth terms has been aged 45 to 54. And just anecdotally, I can say that having talked to a number of build-to-rent providers recently, and these are companies that are building blocks of flats and renting them out themselves, I can say that often their fastest growing segments aren't young professionals, but actually people of a slightly older demographic who are looking for a plug and play rental solution where they can move in and not worry about their property. And clearly, who you're going to rent it to or who you're going to rent your property to is a key question that Marc and the team can help answer, as well as the right type of property to buy in the first place. Now, if you go on to the next slide, London has, over the last year, and I think this is a really important point for many of you investors, really has had less stock available to sell and fewer new listings coming to market compared to a year ago. If you look at the chart, that's on the left-hand side. We've also seen that conversely, buyer demand has been increasing compared to a year ago, with double-digit growth in prospective buyers searching to buy property in London. So London remains a competitive place to buy property. Another reason why working with a good agent is really, really important. Now, on the next slide, when it comes to the private rented sector, we've also seen a trend over the last 6 months of a real lack of supply, which has been down 25% over the last 6 months. Part of this is driven by a number of UK landlords leaving the market because the government has started to make buy-to-let less attractive from a tax perspective over the last few years. However, the key point here is that while rental stock has had lower volumes, tenant demand has been up across most parts of London, with more people looking for properties than a year ago, which has in part led to average rental price increases of around 5%. And for foreign and UK investors, the key trend to note here is that the right rental property will have really strong demand from tenants. On the next slide, you can see what's happened to rental demand during March, when the lockdown was put into force. Far less tenants were searching for properties, especially larger properties. However, if you go on to the next slide, you can see a more full picture of what's happening to completions. And I think this is probably a more important chart, and it gives us a more in-depth look at what's happening right now. So this is a graph of Rightmove's subsidiary, Van Mildert. So just to give you a little bit of context, Van Mildert is a referencing company that completes checks to make sure that the tenant is who they say they are and is able to pay the rent on an ongoing basis. So while Rightmove is at sort of the beginning of the funnel when people are looking for their property in the first place, Van Mildert are at the end of the funnel when people are looking to complete and move into those properties. And as you can see from the graph, references dropped off markedly. So people getting reference to be able to move into a property, they dropped off markedly after the 23rd of March. However, they have been recovering strongly over the last few days since lockdown has been lifted. And I've actually personally been quite surprised how quickly this has risen. And it shows there's been a real pent-up demand of tenants looking to move and complete on their transactions. And this graph is actually a little bit out of date. It's a couple of days old, and we've seen this graph increase as well in the last few days. The other good news is that Rightmove itself has seen a lot of tenants return to our site and start looking for new properties. So we actually think that Van Mildert's referencing numbers, a key metric when it comes to are people moving into properties, not just browsing, we think they're probably going to increase to pre-COVID levels over the next few weeks. So that graph is going to increase, hopefully back to where it was at the beginning of March, where we were having a really good start to the year, both from a buying, selling and renting perspective. Now, on the next slide, you're going to see a very detailed chart, and many of you might not be able to quite see some of those numbers in there, but it's it's essentially showing in terms of what's happening to rental prices over the last 3 years. And what it's really showing is a real disparity of what happens in each different market in London. Again, talking about the importance of where you buy. London is a very large place, and it's very important, especially for foreign investors, to think of London not just as a great morass, but you actually really need to target where you're looking to invest. And I think the team at Benham and Reeves are going to do a really good job explaining what are the different parts of London that you may want to invest in. If you go on to the next slide, this is a little bit more in depth. So what it really shows here is that differing locations see different levels of results. In Tower Hamlets, the average rental price has increased by 4%. In Kensington and Chelsea, prime London, a very expensive part of London, clearly, it's actually increased 3% as well. And perhaps one of the most surprising increases is actually in Camden, where it's going up at 7% too. I'm sure Marc will talk about this, but location in property is the most important thing. And one stat that always sticks in my mind when I'm talking to investors comes out of a piece of research that we did at Rightmove a few months ago. And what that told us was that 70% of UK landlords buy within a 10-mile radius of where they live. And I must say, I've never thought of that as a very good way to invest in rental property. You may know your market, but there are different yields and different sort of rental prices in many different parts of London and the rest of the UK. And you need to look at it holistically if you're going to find the best rental property for you. So although property is local, it's important to figure out where the best rental yield is for you. So if we go on to my last slide, essentially in summary, London, as many of you will know, has seen steadily increasing house prices over a 20-year period. The private renters sector, and I think this is a real structural and important trend for all of you thinking about investing, is going to continue to grow over the long term, meaning that there's going to be a demand for tenants. And I think that's an important thing when you're thinking about keeping your average rental price at a decent level and also increasing it over time, increasing your rental yield. There's a real lack of rental stock at the moment in London, a real lack of rental stock. And that means that demand is often outstripping supply. And COVID-19 clearly has put a pause on the property market, but it continues to rebound as tenants look to move. And we expect that to continue over the next few months too. So on that note, I'll hand back to Marc. Thank you.
So thank you very much, Rob. That was a fantastic overview. And there's no doubt that this is a situation that presents opportunities. And to invest at a time like this is not easy, but history is our friend here. The keys are clear thinking, meticulous planning, on-the-ground knowledge, and a trusted independent partner. Buying well is something I preach professionally, and it's something I practice personally. And right now, I'd suggest that it involves preparing in 4 key areas. First partner, which I do believe the most important, is having a trusted independent partner, someone who will hold your hand and guide you through the process, avoiding all the pitfalls, pointing out the pros and the cons, not just the pros. I'll return to this shortly, as we can be that partner, but if you feel that there's a lot of work involved what I'm about to describe, then A, you're right, and B, the right partner will take it all off your hands. So having the right partner is important, but buying well means being ready to buy the moment you find the right opportunity. And that not only means working out your budget, i.e. how much cash you want to invest, but ensuring your finances are sorted out early. This crisis is very different from, say, the credit crunch of 2009. Then, the banks effectively shut down lines of credit. This time, they are lending and are being encouraged to lend by the government. And with rates at an all-time low of 0.1% Bank of England base rate. It's vital you have everything in place. So as I said, the moment you find the right opportunity, you're ready to pounce on it and not get beaten by other buyers. And that's irrespective of whether it's for your child to use while they're studying or living in London, or as a second home in London, or if you're going to let it out, all of these are ultimately investments, which is why buying well is absolutely critical. But what is that opportunity? This is where it's crucial to master the skill of relevance, because if you're buying solely to let out, it won't be a place for you to live in. It'll be a home for someone else to rent from you. And the key is to think about who they are, what they might want, and what they'll be keen to pay for. So what do London tenants want today? And what do they look for? And this is something we as a company research regularly, and we look at the results and analyze them in the research that we provide and the advice we provide to our clients. And unlike most other agents, our pedigree comes from our lettings background. So for 60 years, we've been doing lettings, and now we do sales as well, but lettings is our main business. And so we do things a little differently than others, almost back to front, focusing on the rental, who the tenant is and the amount of rent you can get first. Of course, some things never change, including the oldest property adage of them all, which Rob mentioned, location, 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 which is primarily in terms of geography, but also includes things like a good view, away from main roads or train lines or high walls. Although I'm not saying shouldn't consider slightly compromised views, and this will be taken into account within the price. Tenants want excellent transport links, less than 10 minutes walk to a station. Families, they want to be near good schools, close to other families, near to parks and public gardens, especially at a time like this. Young professionals want to be as close as possible to bars and cafes. Obviously not great at the moment, but they will want to be near them as soon as they open. But some things are becoming increasingly important. The pandemic has already led to more questions about space for desks and internet speeds than we've ever heard before. And catering for a tenant working from home is going to be a feature for the long term. Then there are the on-site lifestyle facilities like gyms, swimming pools, and you'll be surprised to learn that our tenant survey that we did last year showed that after proximity to transport, the most sought after facility tenants wanted was a cinema screening room. Fast broadband is obviously crucial, as it's essential for working from home, and all the more important in light of the current virus. And each bedroom must have their own bathroom. You should only ever buy a 2-bedroom apartment or house with 2 bathrooms, or you limit the rentability. The days of professional flat sharers using the same toilet have passed. Many tenants insist on a professionally managed property too, and that's something I'll mention in a minute. So to buy well, you may not be able to tick every box. So I suggest talking your budgets through with us or your trusted partner, as we or your partner hopefully is going to be the one that's going to find the tenants for you. They'll help you decide what sort of tenant is possible, be it a corporate, a professional, a student, a couple, or a family. You can then create a very specific and relevant list of priorities for your investment. But as I said earlier, buying well is imperative whatever the reason, whether a holiday home, child's home while they're studying, or of course if you're letting. Then a tenant is a key part, but it's only half the story. The other side is capital gain, and as such it's equally key to also identify the things that will make it a great investment over time and generate strong growth. This includes carefully deciding where to buy. Most people don't realize this, that London has 6 zones and 32 boroughs, all of them very different, each performing very differently. So it's crucial to consider regeneration areas or new infrastructure projects like Crossrail in order to focus on the area that will perform best for you. That's why knowledge, research, and independent advice are critical. So you know what you want and ideally where you want it, but assuming you're buying a new build, it's important to select the right developer, not just in terms of their finances, because at times like this, we have to be careful to check the liquidity of everyone in the supply chain, but also their service levels and their build quality. Most developers will deliver a build on time and on budget, but not all have a great reputation for after service. Completing snagging lists, fixing problems, and ensuring you will have a happy tenant who continues living in the property and paying the rent. Not just from the very start, but the whole way through your ownership. The developer needs to be there to deal with any issues that happen as a result of the build. And that should be non-negotiable in my view. And then consider how each developer's developments have actually performed. This is where research comes in. So which developments have performed the best and which not so well? All developments, I know they look amazing on the website and in the brochures and on the photos, on the CGIs, but not all of those will end up as you would expect, and some will perform far better than others. All of this is absolutely crucial to have the right partner who has the knowledge and experience and has done the research to guide you. So with all that in hand, there's just one more key decision to make, and that's timing. So we just heard from Rob about the London's historic pricing, and I'm adamant that we will look back on this time as a unique opportunity, a time that many panicked unnecessarily, others were sadly forced to sell, and those with an eye on the bigger picture made some brilliant investment decisions. You know, you don't buy stocks when the market's at a record high, or bet on a football team without winning 3-0 at half time. You look for assets that are underperforming with every prospect of a strong recovery. And I believe that's exactly what we have right now. This isn't the first financial crisis in recent times, but it is the first that wasn't caused by financial issues, which means that there's every chance of sustained growth once the pandemic allows us to return to normality. If you look at China, which is of course a couple of months ahead of us on the COVID curve, on February the 8th, there were only 22 sales achieved across 30 cities. But if you look at the figures here, and this is from our own research, we looked at this, by the 31st of March, that figure had jumped to 5,976. That was above the pre-COVID levels. But as you decide on your timing, please remember that you buy a property with two goals in mind. As I said earlier, capital appreciation is one. And on that note, I'll repeat the same advice I gave my clients in 2010 and 2000. Don't buy a property that you want to sell within 5 years. A flipping strategy, which means selling before you complete the purchase for a short-term gain, it's very, very dangerous. There might be a big fast recovery, but please take a longer-term view or you could come unstuck and lose money. And don't forget that any property investor's key concern, it's investment yield. And with supply in London always lagging behind demand, with fewer local people in a position to buy, and with values potentially lower than before, and with the first-time buyer now reaching 34 years old, yields of 4 to 5% should be very achievable. With bank interest effectively zero or worse, it'll be negative when you take inflation into account, and share dividends tumbling, then this yield of 4 to 5% is very appealing. Discounts are definitely available, and we all love discounts. And the rental market is already recovering, which Rob illustrated in his slide. So it's not just timing your purchase, but also deciding whether now is actually the time to buy a completed property that can create instant yield, rather than buying something 2 to 3 years off plan with staged payments. But that is something for you to decide about, whether you want to buy now and you have the money ready to buy now, or you want to buy in stage payments to complete in 2 to 3 years. So to buy well, there are 4 major considerations for us all: relevance and research, the developer, timing, and to end where I began, through the right choice of partner. And as I mentioned earlier, it's not easy to get all this done alone. Getting the right independent advice is where we come in. We have 60 years experience in the London market, primarily in rentals. Of course, we help with sales, but rentals is our background. Today, we have 16 branches with 2 more scheduled to open, 1 later in the year and 1 coming up, which is interesting in light of what other brands are doing and closing branches. Plus, crucially, we have 8 more internationally. We were the first agent 25 years ago to open offices for our clients in Hong Kong, which was then followed by Singapore, Malaysia, Shanghai, and we now have 3 in India, in Delhi, Mumbai, Bangalore. And we have a recent one in Dubai covering the UAE and Africa. And today, clearly, we have clients across the globe. And I believe that they choose us because we're always here and happy to help in their own time zone, in their own language if needs be, to advise them against buying if we don't think it's right. And at a time like this, when everyone is desperate to earn money by selling property, it's crucial you take advice from someone who's prepared to say no, while still providing a holistic service that includes everything you need. And we offer a full one-stop service, from investment advice of what to buy and where to buy. Then we do the handover and snagging from you. You don't have to come to London to check the apartment's finished correctly, check the washing machine's plumbed in. We can arrange and do that for you. We then furnish it for you and deal with refurbishment if you want it decorated or new kitchen or bathroom. And then we look for a tenant and credit reference them for you through lettings, and then deal with the property management. So unlike some parts of the world, the tenant doesn't call the owner. They call us to deal with any issues going on and liaise with the developer if there are things that need doing. And finally, we do tax returns for our overseas clients in-house. So you have a one-stop to come and deal with somebody who can deal with everything for you. And as I said, we do all these things, but differently, we don't subcontract any of it. We do it all in-house. So we don't get let down, and then we never have to let a client down, which is particularly important if you have a tenant moving in. Another difference is that we, and that's our senior people and all our directors, we often invest alongside our clients in the same developments and the locations, putting our own money in, which clearly I hope gives you some faith and shows that we demonstrate what we believe in, that we believe in what we recommend, and using the same exact research process. And here are some examples of what we've actually done. So the first property, I've chosen a few properties here, and they aren't just the best ones. I chose one in different parts of London. So, and these are each owned by either the directors or some of our senior people. So the first property is owned by our managing director. It's in Notting Hill, which is Zone 1, prime central London. It's a lovely 1-bedroom flat in a brand new development. Our purchase price, she paid $460,000 in 2014. Well, today, the current value is $630,000. And these are all done on recent valuations because they were, every single one of these properties within the last 3 months have been revalued. So I haven't just made these figures up. So the current value is £630,000 and an annual rent of £26,500. That gives you a gross yield on your investment of 5.76%. Now, as I said, it's 2 points, 2 parts to an investment. If you paid cash for the investment for this property and you paid the £460,000 in cash, then your return on cash will be 36.9%. But just look, if you got finance, and 70% is easily achievable, some banks are even offering up to 80%, then you'd have only put £138,000 of cash in, and your return on cash will be 123%. So that's pretty amazing. If you turn to the second property, and this one's my own property, it's in Southwest London in Tooting, which I bought in 2015. It's a 1-bedroom flat, and we have about 15 clients that bought in this development alongside me. And in the first property that I meant to mention that Anita bought in Notting Hill, we had about 35 clients buying that development alongside her. So I'm just saying these figures, all of our clients will have seen these returns. So again, I bought a 1-bedroom flat. I bought it in 2015, so it's 5 years old now. I paid £320,000, and the value, I just had it revalued because I just remortgaged it, and the bank valued it at £475,000. The rent is £18,660, and I'm getting a yield of 5.83%. So that's pretty fantastic. If I'd have paid cash, but I didn't, but if I'd have paid cash, I'd have almost got 50% return on my money in a 5-year period, which is pretty good. But I pay finance because that's what we recommend to clients to do, because you can offset the interest against your tax. My return on my cash of £96,000 has been 161%. So that's pretty impressive. And as I said, that's in Southwest London. The next one, it's in Stratford in East London. This was bought by our director in Singapore. So she bought this, a 2-bedroom flat, again, back in 2015. She paid $365,000. The current value is $585,000 with a rental of £23,400. It's giving a rental yield on her investment of over 6%. That would take you 10 years in the bank to get that. 1 year's income. It's pretty amazing. And then her return on capital, if she paid cash, which again, Doris didn't pay cash for it, but she's had 60.3% return on cash, which over a 5-year period is even better than my one in Tooting, but it's still pretty amazing. But she got finance, and her return on her cash has been 200%. We had, I think, over 50 people buying this development in Stratford, and they've all done incredibly well. Just turning to another one, which is in Ealing. So this is now in the west of London. As you can see, I did centre, south, east, west, and then the final one will be north. Again, it's a studio in Ealing. This was bought by our finance director. So Vida bought this property. It's a studio. He paid £280,000 in 2012. The current value today, it's gone up to £450,000 with a rental yield of £15,600. He's getting 5.57% gross yield. Of course, there are costs to come off from that, but that's a very strong gross yield. With no finance, but again, he got finance, he's returned 60% on his money. But with finance, again, over 200% on his cash invested. It's amazing the returns that you get. And the last one is in Colindale, which is northwest London. It's a 2-bedroom flat. It's owned by our head of management. And she bought a 2-bedroom flat here. Purchase price was a while back, so it's 12 years old now. £250,000. The development's called Beaufort Park. We have about 400 of our clients have bought here. And I didn't talk about Dickens Yard in Ealing, which was the one before. We have about 200 clients that bought there. So in Colindale, the current value is £450. The rental is £20,600. It's giving a gross yield of over 8%, which is unbelievable. Without finance, she's returned on her cash, if she'd have paid full cash, 80%. But with finance, over that 12-year period, she's got 266% on her investment. I just think these show the kind of returns you can get. And as I said, I have not picked the best ones. We have some that are showing 400% and showing yields of 15%, but I didn't want those. I wanted a fair reflection across London to show you what is easily achievable. This is easily achievable. We have hundreds of clients who I could use these kind of slides for to show you. So as I said, these are things we do. We invest alongside our clients, and we're always here to help. People can get my mobile number, they get my email, they can call me, they can WhatsApp me, they can WeChat me, and get in touch with any clients, any questions any clients have. They know that they can get on and contact me and ask whether I like this development, or we like this development or not, or this property or not. And we give them honest advice. So you should use us to buy well. And if you do decide to push ahead, and hopefully with our advice, you really do buy well, then we'll be keen to help you rent it well too, as I said. And in our experience, there are some great ways to maximize your investment. So now I'm going to pass over to Mansi Mehra, who's our fantastic design director from InStyle Direct. And she's an expert in helping clients maximize their investments. And it's really incredible the difference that her finished. Rob and I are going to join back with Mansi to answer any questions. And I can see now we've got over 50 questions. So please keep them coming in. We may not be able to answer them all, but we will get back to you. So thank you very much for listening. I'm going to pass over to Mansi. So thank you very much, Mansi.
Thanks, Marc. Thank you. At InStyle Direct, we have a very simple sounding job: to take a completed property that is either brand new or in need of refurbishment, and to dress it to impress. And like anyone looking to create a great impression, we have to dress it so that it instantly appeals to the maximum number of people. Marc talked about relevance, and that's equally true in terms of interiors. Our job is to get inside the mind of someone viewing your property and to make it look absolutely perfect for them. So they just think, I have to have this. First impressions are crucial, and we've developed a process that makes a great impression when it's needed most. After we've been involved, 85% of properties are let within 7 days, and 70% properties are sold within a month. Those are outstanding results, based on relatively simple and affordable advice. So where do we start? For an investor, furnished or unfurnished is one of those timeless questions in the rental market. Well, it shouldn't be. In today's highly competitive market, properties must be fully furnished, almost to a show home standard, in order to stand out. In fact, InStyle Direct was formed from our experience of working with investors at the heart of London's property market. We found that 90% of properties let quicker when they're presented well. We curate and recommend seamless furnishing packages that contribute to your property with our knowledge of what the market is doing and what London tenants require, backed by extensive research considering area, tenant demographic, and rental yield, leaving you with decor that stands out from a very crowded market, even against other spaces in the same block, which in financial terms means less time without tenants and quicker offers on your property whenever it's on the market. Our aim, quite simply, is to secure the highest rental income from the highest caliber of tenants in the shortest period possible. So how do we achieve that? I'll start with the walls. Yes, very basic, but incredibly effective. Most completed properties are painted white and offer a blank canvas. To differentiate your property from the rest, well, wallpaper is stunning, but expensive. We suggest creating an accent wall in the master bedroom and reception room, and instantly you're presenting something different to the prospective tenant or buyer without spending a fortune. The next step is to look at furnishing. I'm frequently asked, how much needs to be spent on furnishing? Can you furnish your property yourself? Of course you can. We found that you will spend 30% more in cost and considerably more in time. However, if you engage our services, we can work with you to take an empty apartment and transform it within 24 hours. What is especially important is to select the right furnishing package. A one-bed flat in Zone 4, achieving £300 to £400 a week, commands our entry-level one-bedroom gold pack just over £3,000, whereas a one-bed apartment in Kensington, which may rent for £600 to £700 a week, requires our higher-end diamond pack, just under £6,000. With our experience, we can guide you to make the right decision because we know what works and we invest in it. We hold all our furniture in-house and even make our own curtains and employ our own teams. It's not only furnishing packages we specialize in, we can also help you with high-end interior design and refurbishment for homeowners and developers. Anyway, that's enough about us. Let me show you a few examples of interiors making all the difference. In the next slide, you will see Royal Mint Gardens. Royal Mint Gardens is one of the most sought after developments situated on the edge of London's famous Square Mile. A private landlord wanted his one-bed apartment to let quickly at optimum rent. As you can see from these stunning images, our rose gold pack completely transformed the property into a stylish, contemporary home. The property was let at full asking price within 24 hours, and the style proved to be so popular that we've had other prospective tenants request it for their homes. Another very different example was in one of Capital's most iconic property developments in the converted Battersea Power Station. It had been marketed as a one-bed, unfurnished apartment, and prospective tenants had come and gone unimpressed. We were bought in, and we felt the white diamond pack was best. We focused on high-quality furniture with striking accessories. We carefully styled a beautiful space, determined to release the property's full potential in 2 working days. The agent called one of the clients who had already rejected the apartment on first viewing and convinced them to take a second look. That very same client visited after 48 hours and put in a bid at the full asking price. Now that's impact. Buying a property is an emotive subject. It's often hard to know what will appeal to buyers. That's why it's so important to present potential buyers with a home full of style and personality, somewhere they will fall in love with and where they can instantly see themselves living. The art of home staging can often be a secret weapon to encourage more viewings, more offers, and more sales. My third example is Willow House, a boutique luxury development in Victoria. While its location in this sought-after area was a real plus for the developer, there was intense competition from many other developments in the area. We were asked to create a sophisticated, contemporary interior for the penthouse apartment. After home staging, the penthouse sold almost immediately at asking price. And the buyer loved the interior so much, they bought all our furnishings. Following this, the developer asked us to furnish all the remaining properties in the building, all of which sold very quickly. I would like to conclude by saying, always start by thinking about your target market and work around their needs. London is full of many similar apartments, and although there are many tenants, the key is to stand out and to attract the highest possible rent in the shortest time. At this difficult time, we know that money is tight. So we are offering a 10% discount on all our packages until the end of June to all of you who have attended this webinar, or alternatively, the option of paying 50% now with the balance coming off your future rental income in partnership with Benham and Reeves. Thank you so much for your time.
So thank you very much, Mansi. And as I said, Rob's here with us now. I hope he's going to come on, and we're going to answer some questions, and there've been a lot coming through. So I think the first one, which is quite interesting, is so Anwar asked, is London property likely to go down, stay flat, or go up in the next 12 to 18 months? So I think that's definitely one for Rob. So let you do that.
Thanks, Mark. Well, I think it's a really interesting question. I think that we've seen London is has always been a competitive market. And I think we're seeing a lot of buyers. Actually, I just got an email while Marc was talking about actually the fact that we're seeing buyers come back to the market in quite strong levels on Rightmove. So I think the competitiveness of the London property market will stay for a long time. I think it's difficult to tell what people's tastes are going to be over the next few months. I think that some people may want to move out of London, but I think actually London has always been a robust place to invest in. So my view would actually be probably that it will be stable in the short term and probably will increase in the long term. But I don't have a crystal ball, and clearly there's a lot of uncertainty at the moment. Marc, you might have a view too.
Yeah, so I think that actually where we're seeing what we're actually seeing in the market at the moment is lack of transactions. And the reality is people can't get out to view, valuers can't get out to value. So if they're having to rely on desktop valuations, which some banks will allow, or automated valuations, then that's fine. However, that's only temporary. So there is a huge pent-up demand. Don't remember that not everybody's an investor in the UK market. The bulk of people that buy are homeowners, and they have to move. They're forced to move. And so those people haven't been able to move. Now the market's slowly starting to open up and valuers are coming in. I think you'll see people start to move. However, there's still going to be a lot after after things return to normality and people are going out. I think people will worry about their jobs. Job security is going to be a key feature we're going to see coming. And therefore, I think people aren't going to be rushing to make transactions, but equally sellers are not going to be rushing to drop prices unless they're really desperate. And my advice to everybody, I've had so many sellers contact me saying, Marc, I want to exit. I want to buy something new. I want to exit. Is now a good time? This is the worst time to be exiting because there's so much uncertainty. You should be holding, renting, and keeping it. But as I said, in terms of where prices are going, I think you're going to see flat growth. Lots of pundits have been saying drop by 5%, drop by 10%. I just don't see it. You may say some coming off outside London, but in London, there's definitely going to be something I keep referring to, a Mexican standoff where buyers are expecting deals, sellers are not willing to accept them. So you're going to end up with this two parties facing each other, and eventually buyers will have to curtail. Interest rates are super low. Unemployment is not through the roof thanks to the government intervention. So I don't feel we're going to see much drop at all. And I think you'll see flats now, and you're going to see figures coming out. The house price index out was yesterday. You're going to see the nationwide index out, all these indices coming out. And frankly, they won't know what they're doing because there's so few transactions. But I think next year, you will see growth again. Look at what happened just before COVID-19. We saw 2.2% in March. So I really, really feel that we're not going to see much drop. So next question is, and this is one actually for Mansi. So there's two questions. One that's quite funny. Can I save money by making my own curtains? Now, I think that's a good question because I'm sure a lot of people out there think they can make their own curtains and the tenants will like that. So there's a good question for you.
Well, you can make your own curtains, but we don't recommend it because, you know, furnishing does not have to cost a fortune, but it must be streamlined because every factory has a different way of measuring and making, and the timescales can be very different. It is not recommended to make your own curtains. In fact, we have developed an excellent fabric that is even cheaper than blinds. So you don't have to worry about paying a lot for curtains when you go with us. So I would recommend not to make your own curtains. We have our own factory. We source the fabric, which is exclusive to us. And we have a great process with shipping coming in every week. And it's really streamlined. So I would say, give us a chance, and we would prefer if we did the curtains.
Okay, brilliant. Thank you very much. And I agree, professional curtains do look good. And when tenants come to rent, you've got to remember, you've got to impress them. You can't just put in granny's furniture and that broken chair that you have at home in your child's bedroom. They have to look good. This is an investment and an income, and you need it to look great. So another question just for Mansi is, how long does it take to furnish? 3 or 4 people have asked that.
We can furnish very quickly if we have to. But we do get busy. So in order to reserve a slot at the right time, we would recommend to get us involved at least 3 months before completion. Some other companies might want you to get involved 6 months before, but I think that's a bit too much. So 3 months is enough. And we have some great relationships with developers, and we are able to survey your property, access it at an earlier stage to measure for curtains so that you know, we can furnish soon after completion. You avoid any delays and void periods if you get us involved as early as possible. But we store everything in-house, so if we have to furnish quickly, we're quite flexible and we can move things around, and we can do it as quickly as 24 hours.
Fantastic. Here's one that I've seen, which is quite good. With social distancing in place, how do you propose to let tenant view properties? That's from Mr. Mystery. So we were open last week, and I was actually on the BBC, interviewed about opening next week. It's fantastic news for us. The reality is everybody has to be safe. So even with COVID-19, a lot of our properties, if they're unoccupied, then we're still going in wearing PPE, wiping everything, allowing the tenants to go around and not touch anything, making sure we have hand gel, making sure that they wear masks and we wear masks so everybody's protected. If the property is occupied, then ideally, we would like the occupier to go out. It is a lot more challenging, and we are trying to not show if it's occupied unless someone is desperate and really loves that property and there's a reason. But generally speaking, we're saying wait until it's unoccupied. So it shouldn't make that much difference. The market continued, and I don't see any reason why, you know, people can't view properties. And as I said, all of our staff are out doing viewings, but we are being incredibly respectful and safe and careful. We get a health form signed. There's lots of government things we're having to follow. But so I think that's it. There's nothing else, Rob, is there? I don't think on social distancing.
No. I think the video. I think we've seen a lot of demand actually for video viewings, but I think it's maybe for a tenant it's okay. So sometimes they will accept sort of just being able to view it. But I think most people do want to sort of walk around a property, feel it, touch it. You know, look at the designs that Mansi's talking about, feel what a property's like. So I do think it can be a little bit challenging, but I just come back to the fact that rental demand is so high, and a lot of tenants actually just do need to move. So I think the things you're putting in place, Marc, are exactly what you should be doing and trying to fill that gap. I did hear about one agent passing the keys across on the end of an umbrella, which I thought was quite innovative, but unfortunately, I don't think it's quite 2 meters of social distancing. So I don't think that's gonna take off.
It's quite funny. Someone else asked, are most properties in London furnished? In fact, a couple of people asked this. Do most people need to furnish properties or don't? I mean, I'll answer that and then Mansi answer. Well, maybe Mansi, do you want to answer that actually?
Well, yes, as I said earlier, I think with the stats, it's really important to show your property well. And if you furnish your property and present it in the right light, it is definitely easier to let it, and it shows the prospective tenant or buyer the best features of the property. And I would say yes, I think most properties should be furnished so that they do well. That's my view.
My view from a statistic point of view, so Benham and Reeves last year let just under 3,500 properties. So we are actually, even though we're not as big in the names as Knight Frank Savills, Foxtons, we do actually do a fair amount of letting, and 70% of our clients are overseas, and they rely on us, as I said, to do whatever we can for them. And we give right advice. It's not just to sell a furniture pack, but of the 1-bedrooms that we rented in 2019, 97% were let furnished. So that, in my mind, means I would always furnish. 2 bedrooms, it's still just under 80%. So what I'm saying is you furnish it, whether that's second-hand or new. So a couple of people have asked, do I need to furnish if they're new? Because I don't furnish because I've got some second-hand properties. I think you will get the odd tenant who wants to rent an unfurnished 1-bedroom or 2-bedroom, or studio? Of course you will, because some people have their own furniture and of course longer term tenancies, which we're seeing coming. But generally in the transient rental market where people are coming from overseas, if you look at the numbers of international students studying in the UK, 450,000 of them, none of them come with furniture. None of our corporate tenants from Japan, so we have a large Japan desk that works for large Japanese companies, none of them come with furniture. None of our American corporates, except for houses, come with furniture. So if it's small, furnish it. The other thing to remind you to think about on furnishing, and Mansi's the expert really, is the fact that, let's be honest, even me, and I've been in property for a long time now, I know I don't look it, but I've been in property for a long time, you go in and look at a property that's unfurnished. The first thing everybody that walks into a bedroom says, oh my God, where will my bed go? Because you can't, your mind is not set up for space planning. So therefore, if it's furnished, you would be amazed the stories we have where we furnish apartments. We had, in fact, a good example of just on this is we had an apartment a few years ago in a development called Imperial Wharf. We had a flat on the 3rd floor and a flat on the 5th floor. The 5th floor flat, which technically had a better view, was totally unfurnished. The flat on the 3rd floor had a worse view, but it was furnished by InStyle as it happens. The tenant, it was a larger property. The tenant viewed the one on the 5th floor, which we thought was perfect because he wanted unfurnished. He discarded it, saw the one on the 3rd floor, offered on that, and we had to take all the furniture out. Why? Because he couldn't imagine himself living it, even though they were identical. So it's just important that I think furnishing is very, very, very important, and it helps you get a higher yield. So a next question for Rob is, why is now a good time to buy a buy-to-let purchase, to make a buy-to-let purchase? Is London, where I have my portfolio, no longer good to invest anymore? That was asked by Miss Nelson.
I think that's a two-part question. I think Warren Buffett used to say, be greedy when others are fearful and fearful when others are greedy. And I think that's sort of, you know, there was a huge, just talking about the stock market for a second, there was a huge flurry of investors trading when sort of lockdown started. And clearly those people were trying to buy the dip. I think property is a little bit harder because obviously it takes a little bit longer to make that transaction. But I actually think that you really need to be thinking about not really the next year, the next 18 months. It's really a 5 to 10 year time horizon. So I think if you're saying, well, you know, should I buy now? I think now probably is a decent time to buy because you've got, as Marc was saying, you've got a load of people trying to sell. You've got a bunch of sellers who are looking to exit the market. And that really is the opportunity. I suppose great investors think differently to the herd of everyone else. And I think that's the thing you need to focus on. And I think the point is to have your own view on where you think are going. Talk to people like Marc, who's been in it for 20, 25 years, even though he doesn't look it because he uses great moisturizer. Yeah. And, you know, that's the key. I think you've got to think differently to other people to get great rental yields and returns. That's the most important thing. Warren Buffett is right. Have your own view, talk to the experts, look at the stats, but over a long enough time horizon, I think London has proved over the last 20 years at least to be a great investment.
Thank you very much, Rob. I agree with all of that. I think you know, you need to look to the longer term. There've been a couple of questions about loans. In fact, quite a few questions about loans. So one of them is, can I get 70% finance? And then also about mortgage tax relief. So these are lettings questions, so I'll quickly answer that. In terms of financing, the banks are 100% open, but there are just delays with valuations getting done. So all of the banks we deal with, and I've spoken to about 20 in the last month, every single one of them are open. However, they have different criteria. So I say to everybody, if you want a loan, get a decent broker. And I can introduce you to one, or you can find your own. A broker's the one that will know which bank is lending now to someone from Nairobi, or someone from Singapore, or someone from India, or someone from South Africa, or someone from Hong Kong, or someone from mainland China. They will know who is really actively chasing that business with the best rates and the easiest way of doing that. So it's 100% possible. It is possible to get 70% as a non-resident. In fact, Maybank in Malaysia, they do up to 80% for non-residents for Malaysians. So there are these rates out there. We don't recommend that high. Generally, we recommend 60 to 65% in order that it allows your income to cover it. The other question that I had just quickly on finances is on mortgage tax relief. So Michael Lyons asked, given the phasing out of mortgage tax relief, is leveraging such a good idea anymore? I think 100% it still is. Yes, you have to offset some of you can't offset the full interest anymore. But if you're a non-resident, you still can offset your interest against your income, and it almost ends up as the same. It's UK residents, it becomes less exciting as it was before, but you can look at the company structure. If you own a property through a company structure, all of the interest is offset, and then you can decide how you take the money out when you capitalize it. And so we see a lot of UK investors moving towards companies now, or putting it in joint names. There are a number of things you can do to look at. Mansi, another question that I've had here is, this is actually an interesting question for furniture, but it's also interesting for us. Miss Guo asked, do I need to come to London to choose the furniture and check it's all installed?
We don't, we can send furnishing mood boards, we can send photographs, we can send videos showing a selection of furniture that we have in stock, but we don't need people to come and choose the furniture if they are not already planning to. We can show you videos with the progress of furnishing. We can take professional photographs showing off the best features of your property and have it ready for marketing. So no, you don't need to be in London to furnish your property or to pick the furniture. We can send you mood board selections. We can change things around. We're very flexible. So yeah, you can do everything remotely with us if you like.
Good. I mean, I agree. You don't need to come. And on the back of that, I was asked last week or the week before, a couple of people asked me, do I have to come to do any of the paperwork? Absolutely not. I would say of our clients, probably 50% have never even seen their properties. They come to London, but they never come and look at the property. Look, this is an investment. You don't have to come and see it. If you own shares in BP, you don't go and look at their oil rigs. You don't go and look at their head office. You just don't do things like that. And this is a property investment. So I recommend that you rely on the experts. We get the photos done, we check it, and we make sure it's right. And I think with InStyle, the key thing is if the furniture's not right, the letting agent, that's us, are going to call them to come and fix it. So they need to get it right in the first place. So no, you don't have to come, whether to check the furniture or to check the investment. Another question I've got here is, maybe Rob, you could answer this, is where is the demand going following COVID-19? How important is space, garden, home office versus transport links?
It's a really difficult question to answer. I was actually on a call with a bunch of our team earlier. So we are seeing a lot of searches for out of London, and the biggest search that I think at the moment, don't quote me on this, but I think it's for a garden, is sort of, we do a keyword sort button. So people are certainly looking for more space than perhaps they were in the past. I think really it's a question of where the jobs are. So if we really are in this remote world, then people are going to be looking for different things. I really don't think that that's going to be the case. I don't know about you, but I love my children, but I really miss leaving and going to the office. So I think we are going to get back into an office-based environment at some point in the future, even if it's in 6 months. But I think it may be a little bit different. But I think if we are going back to offices, and that's where I think we will be, then London is always going to be a place for people who want to live and want to work, because they don't want to be commuting in for hours and hours. So I think that's why that question is a little bit difficult. And whether if you think the world is going to completely change, we're always going to be talking to people like this. But I frankly quite miss face-to-face contact and working with people in the office. So I think that's why I think London probably is still a decent place to invest. And I think that's why you've got to still take that independent view of what you think of that key question. I don't think any of us know what the future of work exactly will be. We've proved that we can talk online like this. I still would prefer to be talking to you face to face, frankly.
And I think that, if you look at previous crises. If you look at my favorite one to compare with this, I agree with Rob. I think within 6 months, there will have been hardly any change. Everybody's getting excited about larger properties with a garden. I think people will end up migrating back. Within 6 months of the virus ending, I think you'll find it exactly the same. But I use this analogy. If you look at 9/11, when that happened and the Twin Towers were blown up, it was the end of urbanization. Everybody said there are going to be thousands of people working from home. There'd be no more tall towers. And the next 3 consecutive years after 9/11 was the largest build of towers globally, in London especially, and New York too. And people forget very quickly. And I think we will definitely see some working from home. That's why it's important to consider internet speeds and having decent space. But I don't think, because it's all price relative, and someone asked the question about renting, I don't think people are going to be renting, single people renting a 3-bedroom apartment so they can work in the living room on Monday, the bedroom on Tuesday, and then their second bedroom on Wednesday. I don't think that's going to happen. Good question here. I don't know if you know this, Mansi, but if not, I can help. So Mr. Shafiq asked, over how many years can the cost of furnishing be depreciated and the flat needs to be refurnished?
I'll give it a shot. So we have 2 different ranges, gold and diamond pack, and depending on the value of your property and the rental yield, it is one or the other that you use. I have to say, in my experience, the diamond packs don't need to be changed or touched for 10 years. Their life is very long, and we choose furniture that's really high quality, and it doesn't need replacing unless there is misuse, of course, but I feel that they have a very long life. And with the gold pack, it is half the price almost of the diamond pack, but the quality is not compromised either. So maybe I would say 5 years on the gold range and 10 years on the diamond for us.
Okay. I mean, generally speaking, if it's tenanted, it depends on who's the occupier as well.
Yes.
If you have 5 students living in a 5-bedroom house and they're first-year students, and you should know that because your agent should tell you, then there's going to be a lot higher wear and tear because they'll all have girlfriends or boyfriends or whatever, or partners, and you'll have pile up. So the wear and tear on that, which you cannot charge tenants, will be higher. If, on the other hand, you have a 5-bedroom house and you have a single guy who commutes from here to New York, the wear and tear is going to be a lot less. So that does affect the ability, how often you need to refurnish. If it's the corporate market, generally we say things like sofas, 5 to 7 years, carpets within 5 years, bathrooms have a 10 to 12 year lifespan. It's varied, but as Mansi says, different qualities, different outcomes. So an interesting question that I've seen come through is to do with potential zone in London for invest besides zone 1. So have you got a view on that, Rob, of where, if it's not zone 1, where they should look at?
I would. Hang on. Yes, I do. I don't have one off the top of my head, to be honest with you. There are a number of interesting areas. Mark, if you have a go, and then I might come back to you.
So what we say to clients is zone 1 is a prime centre of London. Some parts are better than others. Not all of it is like Knightsbridge and Belgravia and Kensington. Some of it's south of the river. I mean, we honestly are suggesting now your capital input for buy in prime zone 1 is going to be a lot higher, and therefore the rents that people pay are lower, so your yield will be a lot lower. And yields in prime areas can be anywhere as low as 2%, rising to 3.5% if you get out of zone 1. We honestly recommend to most of our clients to look at zone 2 to 4, because if you look at the further zones, and different areas have different things. As I said in my presentation, people look at different things like regeneration and Crossrail and things like that make it do. But further out, your capital investment will be lower. Your rental will be proportionately higher because there's more people looking for cheaper 1-bedroom flats or studios and lower value entry points. So therefore your yield will be higher. So to get a blended return, that's why we look at further out. If you want pure capital, that's where you buy zone one. And some of our clients only want pure capital. Rob?
So, yeah. So I just wanted to get this so I got it right. So if you look at I'm just going to look at the last 6 months of increased sort of average rent. And I think that obviously that correlates with yield too, depending on what you've bought it for. So Camden over the last 6 months has seen, and Camden is a very big borough, so you've got to sort of take that with a little bit of a pinch of salt. But in the last 6 months, it's had average rent increase of 16%, 15%, 12%, 8%, 11%, and 10%. So that's compared to last year. If you look at someone like Hackney, which is interesting because a lot of investors will say, you know, Hackney has had a wonderful run, and whether it's going to keep going, but you know, they've had 14%, 16%, 21%, and 12% of average rent changes year on year. Another one is Merton, and one perhaps is a little bit left field, but I think Marc and the team will know it, is Harrow, which again has seen sort of average rental increases of almost double digits actually over the last 5 to 6 months. So it is interesting that you do need to pick your area, but I would also say it's not just the location or the borough, it's certainly the property type. I think that's the key.
I think I totally agree with that. Harrow's been actually doing a surprising number of lettings there because there have been some new developments come in the further out areas. But you know, we can go through that. I don't want to specify on particular areas now, but outside zone one, it's really good. And there's a variety of offer. In fact, the property I'm talking about investing alongside, the property that I just bought is in Southall. It's called Southall Waterside. It's launching very shortly by Barclay Group. It's a fantastic, I mean, I really like it. I just bought there. I just reserved there. That's my next one, but there are many others, and we will have an exclusive release on that. So if anybody, this wasn't really a sales, I just mentioned that because it's good. Couple of questions are talking about oversupply. So someone asked, agents are telling me there's currently an oversupply of property and rents are falling. It's a tenant's market. And interesting, and then someone on the other hand, interesting to hear there's a lack of stock. I thought the market was being flooded with former Airbnb properties looking for longer term lets as the holiday market is closed. Is this not the case? Do you want to do that, Rob? Or?
Yeah, so the trend I've seen this for a while in London, but it's also across the rest of the UK, is that for rental stock that we are down year on year in terms of properties to rent. It's, as I said, it's one of the reasons why you've seen average rental increases in somewhere like London. So no, the truth is we need more properties to rent because more people are continuing to want to rent in places like London and the rest of the UK. So no, we have a stock problem. We don't have a tenant problem.
100%. We're 100% stock problem we have. We're short on stock. Stuff is still renting, and you know, I'm not saying every property is renting. There are often reasons why stuff is not renting. It's often price. And in this market, you know, you need to look at your price, but you don't have to drop it ridiculously. Yes, it's a tenant's market because there is other stock. And as someone pointed out, there are Airbnb properties coming on, but it is a huge shortage of property. So I wouldn't, we're in a lull at the moment. Universities, as everybody knows, and schools, gosh, help us all who've got children at home. But this lull will end, and when the universities come back in September, we're already getting inquiries from people starting in September who know they're not going to come back next term. That student market is a big market, and that will suck out a lot of the stock. So it is going to be a little bit challenging now. You should not be seeing massive drops in rent. We haven't seen any massive drops in rent. We've seen some adjustments on some properties, but not on all. And so I wouldn't say there's a generic problem at all. Trying to find, we're gonna have a couple more minutes, and then we're gonna end. Let me try and find one more. How many? Yeah, the same question about people leaving London. How many days are properties staying are properties staying on the market? Rob, you might have a stat for that, but generally on average, we're still thinking 2 to 3 weeks at the moment, which is slightly longer than at the moment, but Rightmove might have a stat.
Yeah, we do. To be honest with you, it's a bit difficult. The lockdowns really sort of skewed a few of our stats. I don't think, I think it's probably easier if I stay away from that one. But I think all I know is that generally tenants have come back to the market far quicker than we expected them to. I think is the key point. So if they're searching, generally they're sending leads, and we can see them sending leads in large numbers, and we can see that filtering through to Van Mill that's referencing actually. So I think that's really what's happening. I think it probably is taking a little bit longer to actually rent a property, unless you really need to rent something, just because of all the things you discussed earlier, Mark. Sometimes it's a little bit harder to get around something, but I think from a rental perspective, people are a little bit less fussy than if they're buying it. So they're probably more likely to sort of, if it's a virtual viewing and one viewing, then they're happy to take it off the back of that.
Okay. So one of the last couple of questions. So Caroline asked, as a first-time investor in international properties, so she's contacting from overseas, what's your opinion on buy-to-let vis-a-vis care home facilities or student properties? Rob, do you want to take that, or I'll take it? I don't mind.
Care homes is probably not my area of expertise. I think student properties are interesting. I think we've seen strong sort of growth in university towns over the last few years, and actually people have got really, really good returns when it comes to investing in the right area, specifically for foreign students who come in who actually want something that's plug and play at the more sort of affluent end of the market. I think you need to think carefully, and Mansi probably has a really good point on this, which is, how are you going to decorate it if you've got not just one student, but a few students living in it? Because generally there's certainly a bit more wear and tear. So you need to furnish it in the right way, but it's definitely a really interesting way to go. And I think the London university market for a long time has been a place where foreign students, but also UK students come to study. So I think it's an interesting idea.
Mansi, about dressing it, how you dress it?
Oh, sorry. Yes, we recently actually furnished a building for student accommodation in Birmingham, and we did 23 apartments in a record 3 days. But again, it's about knowing the type of tenant. If you're furnishing for students, the essentials like a desk and a comfortable chair, and also single beds and kind of limited storage. You have to make the most of space. Tenants don't need, fancy decorative ornaments. They need basics like lamps and good lighting, and, if they're sharers, single beds. So it just depends on the type of property and the size. And we have great inventories that we have in stock that we can just send for furnishing very quickly.
That's great. I mean, I do feel actually this is a good question that was asked. It's one of those things I talk about a lot to clients. So a lot of clients come and they say, well, if I buy student accommodation, I can get 10% yield. And if I buy care homes, I can get 9% yield. 100% you can. And if you buy hotel rooms, you can get the same. And if you buy a car parking space at an airport, you can get the same. The problem with them is, number one, there's no finance. So you're paying cash. So you'll pay full income tax on the yield. Number one. Number two, if you buy student accommodation and you buy a room in a house, which is how these deal, if you don't buy a whole house for students and you buy one of the rooms in a student accommodation house, and you don't have a student, by the time term starts, you will have zero income for the whole of the rest of the year, because no one can let that property to someone working, because they're not going to want to share with students. So that's the second thing. And the third thing is exit. So one of the bits of advice I give to everybody is, it's easy to get in. You need to make sure it's easy to get out. And if you own a flat or a house in the UK, yes, it's not as liquid as equities, but then it's not up and down as the same way, but you can exit. If it's priced right, there are always buyers. I mean, we've done sales during the crisis, which just proves there are sales happening. So, and if you buy a room, who are you going to sell that student accommodation to? You have to find another investor. Who are you going to sell that care room to? These are alternative investments, and I'm incredibly cautious in any advice I give. I hear real horror stories, and I'm not saying don't put off it, and I'm sure people have done very well, but my advice would be stick to residential. if you don't have a large budget, a couple of people ask, what do I have to invest? You can get 70% finance, which is a mortgage or loan against the property. You can get that, or 60%, and you can buy as little as 250, 300,000 pounds. Even now, you can still buy that low. And so therefore you might only be putting in 75 to 100,000 pounds. Yes, that's a lot of money. But if you bought a student room or a care home, they're going to cost you 50, 60,000 pounds. So I just would rather be with the security of bricks and mortar and be part of that story that is going to grow. I mean, a stat that isn't in my talk today is PwC have looked at, and RICS looked at, the number of people who are going to be renting. At the moment, it's a third of London households rent. In 2025, so only 5 years' time, they think that's going to jump to 60%. And if that's the case, be part of it. Have a property ready to take advantage of the tenants that are there. So we have talked for very, very much, long time overtime today, because it's 11:20 now, and I'm conscious that people have got to go for probably their next Zoom meeting. So that's it from us. I'm really sorry that I haven't been able to answer the 85 other questions we've had. I'm really, really sorry, but we will get back to you. Our details are on the slide. If you've got any questions specifically for Rob or Mansi or myself or any of our overseas teams, drop us an email, get in touch, we'll pass it on, and we're happy to help you. So thank you very much from me, and thank you very much, Rob and Mansi, for your help today. It's been very helpful. I hope everybody enjoyed it. Thank you.